9 to 9:10 was really good, and we've seen that in the room. Like as we've traded in the room, we've seen that that period 9 to 9:10 is really good. You get some really good breakout trades and some good trending trades. Now 9:10 to 9:10. So this period here, very good, and it's a 20-minute time slot. So that's fantastic. Now we jump to 9:20 to. Why do you think 9:20 to 9:30? And it may be obvious to most people. Why is 9:20 to 9:30 such a poor performer if we've got such a great edge there? Why is 9:20 to 9:30 so poor? We have a fairly significant drop off here, and it does pay, as you can see here. It definitely does pay to break the trades down into increments, maybe 10-15 minute increments, because what we tend to do when we're testing is we go, right, well, all right, I'm going to just test the half an hour, but you can see that there will be times when you're trading in that you may as well not be in the market at all. So the pre-market, the pre-open, that's when we see that a lot of traders start to position, and there's a little bit of that positioning, and obviously that's going to create a little bit of volatility. If you've got a strategy that runs a tight stop, now this is a 12-point stop, so you're actually in the market, and you're not really going to move away from the noise, because if there is a little bit of movement or bounce in the market, you're going to get taken out. So I think Karyn's strategy here, it's more of the breakout rather than the trend trader, because she's buying support, buying a breakout of resistance, selling a breakout of support, and it's let me just double check here. It's a couple of points on the breakout. I think it was 5 or thereabouts, and so that means that basically, where are we here? So as I mentioned before, that's negative. So you're going to get that pre-market movement, and she's relying on a fairly tight stop. So 2 points above, 2 points below. Sorry, Karyn, that's right. And that, because using the concept that if you're going to be trading a breakout strategy, you're assuming that the good trades won't retrace too far against you. So using that, the theory of good trades don't go too far against you, and having the tighter stop. So moving along, you've got 9:30 to 9:39. That's not too bad. 9:40 to 9:50. That's probably not worth not great, but then you've got 9:50 to 10 o'clock, which is excellent. So that was a really good time slot there. So if we take out some of those times, we're cutting our trading time down. She excluded the 8:50 to 9 o'clock because the trades were negative, so they basically went as well. So we really cut the trade time down by breaking it up into 10-minute increments. And if you are day trading, you can do that, because you want to be only maximising your time in the market. But again, you want to make sure that you continue to monitor these times, because if we're breaking down our times into 10 or 15-minute increments, they might change over the course of a month, 2 months, 3 months, 6 months. So we definitely want to keep an eye on that. Now, I'm just going to show you just quickly I'll talk through the trade plan. So the trade plan was that it was a breakout 2 points above resistance and 2 points below support. So nice and easy, and that allows you to preset your trade rather than. So if you're manually trading, as Karyn's mentioned to me, nice and easy way to get into the market. Now, what we've found on crude oil is an interesting thing that Jim actually identified, is that crude has almost this vacuum around the key level. So what we're finding is that there's a 14-point, it's kind of like a suction point, 14 points above and 14 points below the key level. So a lot of the trades that set up on crude basically sucked back into, and I'll just show an example of that, sucked back into the initial setup. So if we get, say for example, 82.12, we get a buy setup at 82.12. A lot of those trades won't have the momentum to keep pushing and moving forward. They'll come back to that key level, so it's almost like a magnet. Now, what both Jim and Karyn have done with their trade plan is that they've set that 14 points as their kind of zone of where they don't take the trade. So the key level is not just a couple of points either side of the key level, like being 10 points or less. It's actually that 14 point zone. So that has to be broken before a trade is taken near the key level. That's pretty much correct, Karyn and Jim? That's how you're running those. So I like that concept because I've for a long time have identified that the key level, as these guys have, has always been an area where you're going to get that battle between the buyers and sellers. So that can be very challenging, particularly if you've got two things. If you've got a tight stop, you've got to try to get higher probability setups, and you want to avoid areas where there's going to be a battle between the buyers and the sellers, because that's just going to create a little bit of volatility, a bit of movement, enough to take you out of the trade. So we try to avoid those areas. Now we're going to talk now about the news trades, because this was really interesting. And I'll just grab this on the spreadsheet and just see where I've got this. Let me just go in here. Now, let me just go through the. What I might get Karyn, while I'm doing that, I'll get Karyn to just type a little bit of a mention on the news trades, and I'll go into a little bit more detail on that as well. But before I do that, I want to just show you just the spreadsheet here that we've set up. Now this is a little bit of a combination of well, that's a good question. Now, before I go on to the news trades and the handbrake or way to reduce your drawdown, that's an excellent comment, Brian, because what happens on crude as well, you get a lot of trades on crude oil that's set up that are double tops, double bottoms around the key level. It happens almost every single session. So you'll be trading away on crude oil, and you'll be waiting for a potential setup, and then bang, you'll get a double top, double bottom setup right on a key level. Now those type of trades are just fantastic because they potentially give you an end of the trend or a counter trend trade. And the great thing about that is that you've got the key level, plus you've got that double top, double bottom, and just really easy trades to identify and track. And when you've got the V2 with the support resistance, if you get that support or resistance that confirms the double top, double bottom around the key level, they're just really high probability setups, and you want to be looking to take those. Now, as long as they obviously set up, and with the divergence indicator as well, that volume divergence, just really good. Yeah, so Karyn's saying there that on red all day, so if you go into Forex Factory and you see red all day as part of the news announcement, by avoiding or not trading on those days, you're saving around 64 points. So that's definitely one to watch out for, and you absolutely want to make sure that those, you just keep an eye on the Forex Factory. And she did a bit of research on orange days, which are the orange news days, and there were 28 trades for a total of negative 31 points, excluding those days from my trade plan increased an average of 513. So that's excellent. So the news, now this is the US session. So it's not so much news setting up at the time that Karyn's trading, but it's orange all day or red all day. So if you see that set up on the Forex Factory, then they're the ones that she identified as having the most impact on the trade results for the US session. So guys, let's have a look at this drawdown, because this is interesting because the chart looked good initially, and then it just capitulated. So we'll go in and have a look at this, and I'm going to show you how to potentially avoid going through a significant drawdown. Yeah, so that's an interesting way of looking at the news trades. So rather than just the news at the time you're trading, if you look at it for the whole day, and it's got some good information there.